Mutual funds are also a part of my retirement goals, for example, that I know that after 15 years I'm going to need this amount of money. So, which is why. And direct equity is the balance. I mean, I treat both of them the same. I got into mutual funds because I was already in the stock markets. So this happened quite some time ago. But my initial discovery was during 1999 when the tech boom happened, and there were two or three IT specific funds that were launched at that point of time, and there was a lot of excitement. So I think the experience of being in a vehicle that gives you probably an indirect exposure to stock markets was my first introduction to mutual funds at that point of time. Very good fun. Contribution to mutual funds would be easily more than 50%, yeah? Like more than that, because mutual funds, instead of looking at it as a percentage of portfolio, I like to look at it as goals. So mutual fund is where my kids' college fund is. All of it is out there because I know that I need a specific amount of money and I have been investing it for quite some time and it has an exit value. And I knew that, that over this period of time, I need to be here. Mutual funds are also a part of my retirement goals, for example, that I know that after 15 years I'm going to need this amount of money. So, which is why. And direct equity is the balance. I mean, I treat both of them the same, but since you asked me on percentages, this is how it would be. I risk and only risk. So, you said beyond equity and debt. So, if I look at, you have age-old concepts of asset allocation and diversification. Since you mentioned asset equity and debt, that's asset allocation. Beyond that or below that comes diversification. Within equity, now what do I do? What's my appetite for active? Okay, when I know that there's now enough proof on the record that active does not perform or doesn't beat the indices, etc., etc. Similarly, what do I have under debt, and what are my needs on that? I use debt, for example, in short term. Like if I have an amount of money that comes in that needs to be parked in the short term, I put it there and then I create an SIP into equity from it. Okay. So I look at time and I look at risk. Those are the only two ways in which I decide which mutual funds are appropriate for me. So I think for a retail investor, this is a wonderful time for them to set up a long-term portfolio for themselves. And they really need to do this in terms of planning for their goals and not hitting an investment rate of return that they want. I'm not sure whether it makes sense for me to be the best investment guy in my friend circle. Like whenever we go for a party, "Arey, mera mutual fund 100% ho gaya, tumhara kitna hua?" That's good for conversations. Okay, but at the age of 65, when you're going to retire, what's going to matter is the corpus of money. Nobody cares whether you're India's Warren Buffett. Okay, because bahut log hai waisa. So I think you need to just figure out, as per your goals, how do mutual funds fit out there. For the AMCs, I think they've done a wonderful job in understanding exactly what needs are there. You've got stuff like balanced advantage funds, dynamic asset allocation funds, beyond equity and beyond debt. They do a great job in taking away that decision from you to understand where to put when equity markets are up or when they're down. They're doing that decision for you and it works really well. I think that the asset managers have also done a great job in designing products on the debt side also. Like I said, from liquid funds to GSECs to, there's something for everybody out there. And finally, I think they've also done a good job in communicating, right? Now people know more about mutual funds than they did in my time, at least when I started in 1999 versus now. I think that they've done a really good job. So that's it from both the perspectives. The two most common ones is buying too late and selling too early. Okay, when I say buying too late is that, and both involve a lot of regret. Regret is an extremely powerful emotion for a human being in other areas of life also. So buying too late would be, I only made 20%, I wish I had gotten into it earlier. So that regret thing is something that I've seen a lot of investors, experienced ones have. But even worse than that, honestly, selling too early. Because that means that you knew you had it and you sold it too early. Honestly, for a lot of decisions, even for real estate, buying your own house. I missed it when prices were low during COVID, all this stuff. But the matured ones that I've seen are those that go beyond this and learn from their mistakes. And just say, okay, it happened. I learned whatever I had to learn, and that just makes you a much better investor. I think these two are the ones that give a lot of heartburn to a lot of people. That looks like a very interesting app that Dhan has got. Lot of detailed information on mutual funds. I saw equity and I saw debt, and they've got all the statistics and analytics from top performer, ranking by AUM, by expense ratio, by performance, obviously, because that's what you would want, and a very easy call to action in terms of starting an SIP within the app itself. So please do check out the Dhan app, the mutual funds part on the Dhan app. It's very useful and it's very simple.